Looking at the Markets with David Modell.
Hello and welcome to Looking at the Markets with David Modell. I wanted to talk about Keltner channels today. Keltner channels are kind of like Bollinger Bands, but different, and I also wanted to not only explain the differences, but give you some tips or strategies to help you get started with them and maybe even improve your Keltner channel trading. And if you're wondering what platform I'm using for trading and charting right now, stick around and I will tell you all about that very soon. But right now we're looking at the Keltner channels on the standard settings, and by standard settings I mean that this midline here in purple, that is the 20 period EMA, exponential moving average. Then you've got the upper band and the lower band, which looks kind of like Bollinger Bands, except Bollinger Bands get wider when volatility expands or increases, and the Bollinger Bands get narrower or tighter when the volatility contracts or reduces. Okay, that does not happen nearly as much with Keltner channels. Keltner channels are easier for some people to trade because some people don't like the Bollinger Bands, how they get really wide sometimes and then really narrow. Sometimes it's hard to trade with a very narrow channel. With the Bollinger Bands. Whereas with the Keltner channels, they have a tendency to stay pretty much the same in terms of being reasonably wide, but not too wide and not too narrow either. And so that's visually easier for some people to trade, okay? Now, what some people do is maybe they'll buy when the candle closes below or at the bottom line on the channel, and then maybe they won't sell until the candle reaches the upper line on the Keltner channel. And that's fine, but there's something else you want to look at that's pretty important, I think. And by the way, I'm using the 1 minute candlestick chart on Ethereum versus the US dollar, ETH USD. So stick around, I'm going to tell you something else that you probably really want to know about using the Keltner channels. So yeah, stick around. Right now I want to tell you about Margex, a Bitcoin-based derivatives exchange and trading platform that gives traders the ability to trade with up to 100x leverage. Why do you want leverage? Let's take a look at what leverage can do for your trading. Now, there are risks involved in using leverage. You don't want to over-leverage yourself because, yes, they will possibly magnify your gains, but also your losses. So please be aware of that. But imagine if you use leverage on, let's say, $200. You're trading it. Look at what leverage can do to your gains. Did you see how the gains got magnified there? And the more leverage you use, yes, there could be more risk, but also more rewards. You can put in $500 or $1,000, whatever you have available in your account, and you can get even better gains potentially with leverage. But how can you do that easily and quickly with an uncomplicated interface? You can do that through Margex. Join and get a $50 bonus to pay trading fees. Deposit 0.004 plus BTC and get an additional $50 bonus. How do you do that? Click on the link in the description below this video to join Margex. And I'm going to place a live trade right here using these Keltner channels like we talked about today. And as I'm going to mention to you, I like it when the Keltner channels and the midline here, when they're pointing upwards. I like that upward angle, and so I'm going to place a trade on Margex. Notice how you can get everything you need on one screen in Margex. It is so simple. And here is the leverage slider. How much leverage do you want? Do you want 5x, 20x, all the way up to 100x leverage? I'm gonna, actually, you know what I'm gonna trade is Bitcoin, BTC against the USD, BTC to the US dollar. And let's do 5x leverage. We're gonna start off really simply, and I'm going to trade $200 worth of it. I don't want to hit that sell right now. If you wanted to sell, you'd hit the red button. I'm going to hit the green buy button and then verify it and buy. My order was filled so quickly, so easily. I am in Bitcoin with $200 and 5x leverage, but I could have gone all the way up to 100x leverage. You can do it too with Margex. How do you do it? Well, it's easy. You click on the link in the description below this video, join and get a $50 bonus to pay trading fees, deposit 0.004 plus BTC or Bitcoin to get an additional $50 bonus and up to 100x leverage. Start trading with as little as $10 on Margex. Do it now. Okay, so we're back talking about the Keltner channels. Again, I'm using the 1-minute candlestick chart for ETH/USD, and I've got the Keltner channels on the standard settings with the midline being the 20-period EMA, 20-period moving, exponential moving average. So what I would like to add to what I said before, which is that a lot of people like to buy when the candle touches the lower line and then sell when it touches the upper line. Well, first of all, that does not work 100% of the time. It is not perfect, okay? And you might want to use other indicators as confirmation just to make sure. All right, but notice that it worked here. You know, you touch the lower line on the Keltner channel. You could have bought here and then sold here when it touched the upper line. And then you could have bought here and then sold here, bought here, sold here, and then again, bought here and then sold here. It worked 4 times in a row. Again, it does not always work out that perfectly, all right? But notice that it worked pretty well when the midline, that 20-period exponential moving average, was trending upwards, okay? Remember, the trend is your friend, as they say. And so you're only using this when that midline is trending upwards. It's sloping at an upwards angle, generally. Not every single minute, obviously, but generally upwards, okay? How about when it's generally trending downwards? Well then, if you wait for the candle to touch the lower line on the Keltner channel, there's a decent chance that it might just keep going down and down and down, right? And so, as you can see here, the strategy might not work as well when that midline, the 20-period EMA, is sloping downwards. All right, so you might, and this is a tip or a strategy to add to your Keltner channel trading strategy, is to only consider going long when that midline is trending upwards, not so much when it's trending downwards. That's a time to maybe just stay out of the trade. Or even consider going short maybe if it touches the upper band, the upper line here, and then cover your short position when it reaches that lower band here. But shorting is very risky. It is not for everybody, okay? And actually all these strategies, please make sure you test them out with demo or virtual trading before committing any real capital at all to it. And do your own due diligence, make your own decisions, and just be really careful. Have an exit strategy, stop losses, small position sizes, so on and so forth, when you're testing out a strategy like this one especially, okay? So I'm going to keep on bringing you ideas and strategies to help you with your technical trading. I want to thank you so much for watching and listening. I will talk to you again soon.